Are you in or approaching the time in your life where you need to start taking distributions from your retirement accounts, even though you may not even need the money and you really don't want to increase your taxable income? I'm going to share with you a tax strategy to consider if you want to maximize your charitable impact while reducing your taxable income. My name is Larissa, and if you're new here, I help folks 55 to 63 gain clarity on complex financial and tax planning subjects. Things like making smart decisions about your investment accounts, showing you ways to potentially reduce your taxes throughout retirement, and making plans for how you want your wealth to impact your children and your favorite charities. As you probably know, if you own a traditional IRA, 401k, 403b, or similar accounts, you must start taking required minimum distributions, or RMDs, at age 73, whether you actually need the money or not. These distributions are taxable at ordinary income tax rates, just like a paycheck would be, and this income can push you into a higher tax bracket. RMDs may impact your ability to take certain tax deductions and potentially cause you to pay premium surcharges called IRMA. If you're not familiar with IRMA surcharges, be sure to check out my video specifically about IRMA. Now, if you don't need the money from your RMD this year, you may want to consider a tax strategy called a QCD, or Qualified Charitable Distribution. This will allow you to make a tax-free donation to a charity using your IRA, and it will count towards your annual RMD. Be sure to stay tuned, as in just a few minutes, I'll walk you through an example of how a QCD can lower your taxable income in retirement. So if you're 70 and a half or older, a QCD allows you to make a direct transfer to an eligible charity of up to $105,000 per year, adjusted for inflation, from your IRA. A QCD can be a tax-efficient way to support causes and organizations that are near and dear to your heart. While QCDs are not eligible for charitable tax deductions, they are not included in your taxable income like other IRA withdrawals are. A QCD does count towards your annual RMD from your IRA. Now, stick with me here for another minute or so and I'll walk you through an example. When you use your RMD to make a qualified charitable distribution, your taxable income is reduced dollar for dollar. This approach to charitable giving helps you save on your taxes while supporting philanthropic goals. Let's look at an example from the 2024 tax year for Sally, who wanted to know if she should take her RMD for the year and then donate the money to a charity by writing a check, or if instead she should do a qualified charitable distribution, which instructs her IRA administrator to direct that RMD directly to the charity. Sally is 75 years old in 2024 and needs to take an RMD from her traditional IRA. Her traditional IRA as of last year was valued at $1,050,500, resulting in a projected RMD of $42,703 for this year in 2024. Her ordinary income in 2024 before her RMD is going to be $80,000, and she will submit tax returns with a single filing status. Option 1. Sally's adjusted gross income, or AGI, is projected to be $80,000 this year, but if she takes her RMD income of $42,703, it will increase her AGI to $122,703. If Sally then writes a check and donates her RMD to charity, she would take an itemized deduction for that $42,703, assuming she has no other deductions to itemize. This results in $80,000 in federal taxable income. Option 2. However, if Sally instructs her IRA administrator to direct her RMD as a QCD to an eligible charity, the RMD would be excluded from her taxable income. Sally then takes the standard deduction of $14,600 for 2024, plus an additional standard deduction of $1,950 because she is over age 65 and has a single filing status. Therefore, her standard deduction totals $15,700. As a result, her federal taxable income is reduced to $63,450. Sally is donating the exact same amount to charity in both scenarios. However, her taxable income is going to be $16,000 less by doing a qualified charitable distribution, resulting ultimately in her paying less in federal taxes. Once again, QCDs offer an opportunity to increase your philanthropic impact and contribute to the greater good while potentially reducing your taxable income. Here are the top 5 reasons to consider a qualified charitable distribution. Number 1, you own an IRA and have charitable intentions. Number 2, you must take a required minimum distribution or RMD from your individual retirement account, but you really don't need any or all of the funds. Number 3, you would like to reduce your future RMDs by lowering the balance in your IRA. Number 4, you already have donated the maximum allowable percentage of your adjusted gross income, which is 60% for most taxpayers in 2024. And number 5, you'd like to make a large donation immediately to enjoy seeing your funds benefit a charity that you would like to support. How do qualified charitable distributions work? Well, a QCD enables you to make a direct transfer to an eligible charity of up to $105,000 from a traditional IRA, inherited IRA, inactive simplified employee pension plan or a SEP plan, and an inactive savings incentive match plan for employees called a simple plan. You can make a QCD from a Roth IRA, but there's no tax advantage because Roth IRA withdrawals are not subject to taxes. Qualified charitable distributions are a tax-smart way to use your RMDs to support your favorite charities. The assets from your IRA go directly to the charity, which means QCDs are not reported as taxable income and you won't owe taxes on them. You don't have to itemize your deductions to realize the tax benefit either. For a QCD to count toward your current year's RMD, the funds must come out of your IRA by the RMD deadline, usually December 31st. To avoid potential tax complications, your contribution should go directly to the charity of your choice from your IRA. If you receive the funds first, then donate your contribution, it will not qualify as a QCD for tax purposes. Who can make QCDs? You can make a QCD as long as you are 70.5 or older. When you make a QCD, you can instruct your IRA custodian to transfer all or part of your RMD up to $105,000 a year to one or more qualified 501c3 charities. If you're married, you and your spouse filing a joint tax return, you can actually contribute $210,000 total between the two of you. Beginning in 2024, annual QCD limits are indexed for inflation. Now, it bears repeating, the funds must go directly from your IRA to the charity. A secure retirement starts with smart planning, so be sure to check out my tax planning in retirement video. Wishing you wealth, health, and happiness. If you found this information helpful, don't forget to like and share this video. Until next time, stay financially fit.